and gentlemen, welcome to another weekly call with Loan Originator Level Up with Jay Robbins. I'm Jay Robbins. I've been doing this over 2 decades, and I'm here to share with you every week what you can do to grow and develop your business. Today, we're actually going to be speaking about internet leads, good and bad, because those words are thrown around all the time. And so what we want to get into is what makes a lead good, what makes a lead bad, and what you as a loan officer can do about it. So we'll jump right into it. So first, I want to go over what generally is considered a good lead and what's considered a bad lead. Then we'll get a little bit more into it. So a good lead, generally speaking, is someone who has an 800 credit score. They're able to put down 20% or more. Their debt to income ratio is very low, and they're ready to buy something and close in 30 to 45 days, or they're already under contract and they're ready to go. That's considered, generally speaking, a good lead. A bad lead, on the reverse, generally speaking, and I keep emphasizing generally, it's important that you understand that. A bad lead would be considered someone who's not ready to buy now, someone who doesn't have cash in the bank, someone who has a credit score that's not favorable, may be considered poor. And so what we as loan originators typically do when we see an internet lead is we go right into judgment. And I'm here to share with you that doing this over 2 decades and working with leads coming from all different directions, not only internet leads, but referrals from realtors, referrals from past clients, database, family member, friends. These are all lead sources. And when we get these leads, we'll look at the basics and determine whether they're good or bad based on what you see right in front of you. Here's the obstacle, is that, and I'm sorry to be the bearer of bad news, but my commitment to you is to shoot it to you straight. It's not the lead that's doing a bad job. It's not the lead that's not so good. It's you. And what do I mean by that? And just hear me out. So what I mean by that is it's important to be clear on, number one, what you're saying and how you're saying it. And so secondly, I want to share with you why generally what you might be consider a good lead, why it might not be a good lead, and why you might look at a bad lead and why the bad lead might actually be a good lead. So let's start with it. Let's unpack the good lead first. 800 credit score, low debt to income ratio, 20% down, ready to buy. You look at that and say, oh, it's a good lead, and then you put this time into it. The problem is, in a lot of cases, because you're a stranger, it's off the internet we're talking about, they can go anywhere. They can go to their local bank. They can go to their credit union. People get mail all the time. There's advertisements online. You're one of them. And then you popped up, and hey, it's a great lead. The problem is that most people that are considered vanilla borrowers or great leads off the internet, the odds are they're going to be interest rate shoppers. And so now what are you doing? And there's no loyalty there, now you're leading with interest rate. And so one thing to understand, a little side note, is if you're selling interest rate, it's not sustainable, because you're going to be dealing with all sorts of people that are interest rate focused, and it can lead to an unpeaceful career. On the other side of the coin, if you create what we now consider an avatar, where you're clear on who your ideal candidate is, one of the qualities that I always want from a borrower that I'm working with is someone who is willing to follow my lead, and or if they really know what they're doing, getting me what I need and giving me loyalty. That's my ideal client. And so someone off the internet who's just rate shopping, who's a good lead, may not only be a waste of time, but the odds are high that you're probably not going to get that particular deal because they can go anywhere. And what's so great about you is it your interest rate? Because if you're selling interest rate, someone up the street is going to sell a little bit lower. And a lot of times, as you probably have learned, when you're selling interest rate, you can be, and when you're leading with your value add being a low interest rate, 2 weeks in, and a lot of us are already spending the money before it closes. 2 weeks in, someone else gets a hold of them and their interest rate's a little bit lower, and then they jump ship and you never hear from them again. It's probably happened to you many times if you've been in the business more than 5 years. If you've been in the business less than 5 years, you may have experienced, and if not, it's going to happen soon if you're selling interest rate, meaning you're leading with that. So it's important to understand that what is considered a good lead may not necessarily be a good investment of time. So now let's flip over to what's considered a bad lead, the one who has low credit score and doesn't have any money. So then we go back to what are you saying and how are you saying it, right? So how can you convert what is generally considered a bad lead to a good lead? Well, the first thing is you need to know what you're saying, how you're saying it. You need to be a skilled salesperson, and a skilled salesperson knows what questions to ask and how to dig deeper. And really being served business or impatient, and it comes across over the phone. So the guy who has a 595 credit score and no money, the odds are someone's going to talk to them without a level of patience. They consider them not a good lead, so they're already in judgment. The energy is coming across, and there's no way you're going to get that person regardless. And then it's easy to point the finger and says, oh, that lead stinks. And so how do you turn that around to make it an actually good lead? Well, one thing is you're a service professional, so professionally serve. And one of the ways to do that is to detach from the end result and focus on what's in front of you, which is the serving. You are professionally serving, because you might not get money from this borrower within 30 days. And it might be much longer before you actually close a deal on this. When I say much longer, it could be 3 months or 6 months. But think about the last time someone didn't judge you and really took the time and was very nice and soft and peaceful when communicating with you, and they really worked hard to establish a relationship. The odds are that you probably went back to that person, not necessarily considering the price or considering the price, but not having that as the focal point. You chose to do business with the person because of the connection you had. So let's go back to what's considered that bad lead. 595 credit score, no money. What I'm doing is I'm saying, okay, first tell me why your credit score is 595. And we're going to get into that. And then the next thing is, tell me about your money situation. Well, I'm paycheck to paycheck, but I rent, right? So how much are you paying rent? $2,000 a month. Okay, fair enough. So if you're paying $2,000 a month, the odds are pretty good that we can convert that rental payment to a mortgage payment. Now we're talking about a loan of $225, $250 if they're putting zero money down or very little money down, right? So now we're hearing what they can afford on a monthly basis. We're hearing about their credit. And now as a sales professional, as well as a professional server, our job, and what I do, is I now help them create a game plan. Okay, you have a 595 credit score. Let's pull credit, okay? Because I know you want to do something in the next 3 to 6 months. So we're going to pull credit, and I'm going to look at your credit report and analyze to help figure out what we can do to raise your score. Now, a lot of you know that are watching this, FHA in some cases can go down to a 500 credit score, right? So a 595 is still doable. However, if someone is under 600, the odds are high that there's something on their credit report that you can help them with. And if you don't know, I'll just share with you, and the ones that do know, I'm reminding you, there's two main factors in what there's several factors in what determines a credit score, but the two biggest ones are how high are the credit card balances on the credit cards, and are there any collections, right? Because if there's 3 or 4 collections and they're all $100 each and they're still reporting, okay, zero them out. Now it stops the bleeding. Because if they don't stop the bleeding of the collections, it's going to continue on. And a lot of people don't even realize how it's affecting them. So take $400 or whatever the collections are and zero it out. That's number one. Number two, what sort of credit card debt do they have, right? If we can lower their credit card balance from over 50% of the credit line down to 10 to 30% of the credit line, then we can have a 10 to 20 point bump in their credit score per account. I've done this countless times in my over 2 decades of doing this, where I walk someone through, pay down these 2 credit cards, this 1 credit card, these 5 credit cards, and then not only will you become mortgageable, but now we're putting you in a tier where the interest rate starts to become lower, which then either makes your payment lower or it increases your purchasing power. Now, I'm talking terminology with you because you're a loan officer and you get the terminology. I'm kind of talking DTI and credit card balance and this sort of thing. But when you're speaking to a lead, you're walking them through slowly, which is another thing. When I talk about how are you saying what you're saying, how are you talking? Are you coming to the conversation in a peaceful, non-judgmental way with the commitment and intention of listening to what the borrower wants and needs? Or are you coming with arrogance and determining out of the gate, is it a good lead or a bad lead? And off the phone you go, and hopefully you get a $1 million loan from a realtor referral partner. It's the reason I've been doing this 2 decades, the reason it's been sustainable is because I take my time. Now, I'm not going to spend an hour with someone who has bad credit, but I'm definitely going to take enough time to give them time to help them, to let them know and create a strategy. What happens is this: I've talked to the bad lead, I've converted them over to an application, so now I've pulled credit, I know their situation, now I can give them a game plan. Okay, Mr. Smith, do X, Y, and Z. When do you think you can do that? Well, it's going to take me 1 month. It's going to take me 6 months. Whatever it is, fair enough. I'm going to send you an email recapping our conversation, and then I'm going to follow up with you in the 3 months. That's how long you said it's going to take you. Is that fair? Yes. Okay, good. It was great speaking to you. If you have any questions, let me know. And by the way, Mr. Borrower, if there's anyone else in your life who might be interested in buying or selling, whether it's a family member, friend, neighbor, or coworker, I will take the time to help them as well. Would you please keep your eyes and ears and share my number? Keep your eyes and ears open and share my number with someone who's interested. Absolutely, right? Now, when they hang up the phone, how do you think they feel? Okay. Now, what are the odds of them actually doing the homework that I'm sending them? 50. Okay, so be it. So let's say you do that with 5 to 10 of these leads each month. Let's call it 10 leads a month, 10 conversations, 10 minutes each. Let's call it 15 minutes each, 150 minutes. So about 2 hours, 2.5 hours a month that you had these conversations with. In my experience, half of them are going to do the homework. And of those half, there's 1 or 2 that's going to send you a referral because you took the time. And so if you talk to 10 people and you have those conversations and 5 actually do it, and those 5 don't close until months 4, 5, 6, or 7 from when you originally started, was it a good investment of your time? Because if it's not a good investment of your time, then I encourage you to sit with what's going on with your time blocking. What are you doing with your schedule to where you can't take 10 to 15 minutes and talk to someone who needs help, who's going to be able to close in 4 or 5 months? What are you doing in your day? What does your life look like outside of your career that is causing you to say, I can't spend 10 minutes with somebody? Because I have, and I do, and it's one of the sustainable closing avenues that I experience over the course of 12 months. And that's how I look at my business. It's not what can I do in the next 30 days. It's what am I expecting to happen at the end of this day, at the end of 1 week, at the end of 1 month, at the end of 3 months, 6 months, 12 months. What am I expecting to happen, and what do I have to do to get there? And I'm expecting up to 10 closings, which is about one closing a year of these sorts of leads. So if I'm making $4,000 or $5,000 per loan off of one of these leads and I'm doing 10, I'm adding $50,000 just front end to my annual income. In addition to that, because no one else took the time, i.e. all the impatient loan officers out there, they're very likely going to refer me business. Maybe one or two do. And then that adds another one or two closings to my pipeline. And then I'm following up with them. Happy mortgage anniversary, happy birthday, happy 4th of July, right? So I'm always in front of them, which is lead follow-up, which is a whole other part of how to get a lead to convert to a funding, is what sort of follow-up is in place. So to recap where we are, and then I just want to share a couple of other things. What's considered a good lead might not be, and what's considered a bad lead might not be. Every single lead that comes in, you need to have a clear intention of what the call is going to be aware of your energy. So key. Because if you got into an argument with your significant other and then you're picking up the phone, the person's going to feel it. Would you do business with someone who's being not a nice person? Would you? I very rarely do. Although, because I practice what I preach and I stay away from judgment most of the time. Listen, we're all human, right? We have our moments. But when I'm aware, I can say to someone, hey, listen, I'll say this flat out. I don't know if you are aware of your energy, but I feel like maybe I said something to offend you. And when that happens, most of the time, they'll say, oh, I'm sorry. And then boom, they'll shift right away, right? But most people are not going to say that. Most people are just going to hang up the phone and say, this person was all over the place. So how are you coming to the phone call is key. And then once you pick up the phone, when the person picks up the phone, what is your energy like? How are you talking to them? What questions are you asking? Are you willing to give this lead an opportunity to help them? These are very, very important things. Now, before you pick up the phone, you also want to be clear who you are not for, right? Because if someone picks up the phone and says, I don't know, let's say you only do FHA and conventional, you don't do non-QM, and someone says, I don't have tax returns, right? Then you can say, listen, I don't do that, right? We only do this. So even though they have an 800 credit score and they're loyal and they're ready to commit, if you don't have a particular product, then they're not for you. So you want to be clear on who you're not for. Like if someone has a bad credit score, considered bad, are you willing to push them away knowing there could be a simple fix? And if you are, then okay, your business model is your business model. Some people say, I don't want to take the time to talk to people who have low credit scores. Okay, fine, that's your business model. And then you just have to figure out how to get to that particular person, right? But you want to be clear who you are and who you're not for. You also want to be clear on what problems can you solve, right? So what are the problems can you solve? For me, I've always deemed myself a credit report and credit score expert because I used to train. Not only I used to do webinars and seminars to help people with their credit, but I used to train realtors and major realtor associations, in particular in the state of Florida, on how credit score can actually increase purchasing power. And then they can take some of this information, the realtors can share it with their clients. So that's something that I've always added value in, especially if someone has a 640 credit score, they're mortgageable, but what's their interest rate like? So if I can take them to over 700, but it's not affecting my commission any, what does that do for the relationship? That I'm taking the extra effort to raise their credit score to get them a lower interest rate, i.e. lower payment, all because I said do X, Y, and Z to the credit report. Like, what does that do to the relationship? Very important. So you also want to know what problems you solve. Like, what is your value add? And then, and these are ways to increase the efficiency of leads being good. And by the way, a good lead, as you now can hear, is your perspective. Every single lead is good. It becomes bad based on what you do or don't do. So sit with that. And if you get offended, it's probably because it's true to you. And it's okay. I'm saying this with love. Another, and probably the most powerful way that a lead that's considered bad can convert to a funded deal, and this is probably the most important, is the follow-up. You have to have a follow-up system, even if it's scheduling an appointment and calling them back, or you're using a CRM that has artificial intelligence, that has a follow-up campaign via texting or emailing, et cetera. Here at Boom Digital, it's all done for you. The CRM, the Rainmaker CRM, has all of this for you, the follow-up. And so when you're speaking to a lead and their credit's not great, they don't have a lot of money, and you help them with their credit, you help them with down payment assistance, which is really important. If you don't have access to down payment assistance, look for it. And if you don't, then you don't, right? And then you can't do it. And maybe you have someone who you can refer that loan to that can help them, which then it's karma, right? The energy of karma. It's like what you do will come back to you. So maybe you have a lead that you can't do a loan for, you refer it to one of your colleagues who's in the business, they make money, and it'll come back to you one way or the other, right? It always does. On the opposite side, when you're not a nice person, then that'll come back to you one way or the other, right? And as you can hear some of the things that I'm saying, I'm a big advocate of energy and how we're showing up, right? So you probably feel from me, and most of you that are watching this probably already know me a little bit. Some of you who maybe see me for the first time, I care. I have love for you. I have love for everybody. And I'm not afraid to go right up the middle. And we need that. So I don't like to hold any punches. I prefer not to be Mr. Softy, because we need, like, okay, what is it? And it's another reason why I've been a successful mortgage loan originator, because I carry that in all different areas of my life, not only in helping you loan officers, but also helping clients achieve their dream, what I call money wellness, whether it's to buy a house and feel settled, or do a cash out refinance or lower their rate so they have a healthy money wellness situation. And that's how I've been able to be in the business so long. It's, what is my energy? Am I in judgment? How am I coming to the conversation? And then am I judging this person or not? Am I willing to commit to helping this person because they're asking me for help, and detaching from the result, which is making a living? What am I saying, right? What are your scripts, your questions? And we have all this content that you can access behind the scenes at Boom Digital to show you exactly what to say and how to say it if you haven't accessed that yet. How are you saying it, which is your energy. You want to be clear on who is your ideal person and what are you willing to work with, like who are you not for, being clear on who you're not for. So when you hear that, you can say, well, I'm here to help you, but here's why I can't help you. What problems can you solve? And also, one other thing I didn't mention is a way to convert a lead from hold to funding, and converting someone who is considered a bad lead. You see, I do my air quotes every time. Who's considered a bad lead to a good lead, is constantly producing content, like valuable content. And so one of the things that I do is I send out a video every now and again saying, hey, here's what's happening to the market, or hey, here's how to raise your credit score, or here's how to get money for down payment and closing costs, or here are the top 5 frequently asked questions you need to know before choosing a mortgage professional. So I'm sending this out in the CRM that we have for you at Boom Digital. But you want to have that. So video content and or adding value throughout the relationship also strengthens the relationship to convert, to put someone in the category of a good lead or a hot lead. And then lastly, an important reminder is follow-up, right? So you have to be able to get back in touch with the person. You have to be able to do that when you say you're going to do it, when you're going to follow up, you have to do it. And if you have it set up, like Boom Digital has it set up where it's all timed for you, you don't have to do anything. It's all there. But if you're doing it on your own and you're not utilizing the Rainmaker CRM in some capacity, you have to have a good follow-up system to be sustainable and to really make a consistent living as a mortgage loan originator. So with that being said, I'll open it up to a couple of questions if anyone watching has a question or two. Okay, so here's a question. Let me make sure I'm seeing this right. If someone doesn't have any money, then how can they get down payment assistance? Okay, so there's a couple things. So first off, down payment assistance, right? There are programs out there that are called DPA, down payment assistance. And if you're a lender, talk to your branch manager. If you're a broker, talk to whoever you're dealing with. If you're a broker, get set up with a down payment assistance program. But let's assume that down payment assistance is not an option. One of the things that I've discovered in my years of asking someone if they have money for down payment and closing costs and they say no, I followed up with, do you have any money in retirement, like a 401k? And then sometimes I'll hear yes. So in the original question, they'll say, no, I don't have money, because they're thinking about their personal checking account or personal savings account. But they're not thinking about their 401k because they're told they can't use their 401k until they retire or quit. And the thing is 401k is you can access up to half of a 401k as long as it's going toward the purchase of, say, primary. Secondly, you can also access a loan against the 401k for not only the same reason, but in some cases you can access that cash to pay down some credit card debt, which then helps them become mortgageable, right? So maybe there's not a lot of, maybe they only have money for just closing costs, but they need to pay down credit cards in order for their score to go up. And then I can say, well, check your 401k, because if you're having some sort of hardship, you might be able to access some money to pay down your credit cards. And now they get a better rate because their balances are lower, their credit score goes up, or they become mortgageable. So you always want to offer, if they say I don't have money, you still want to repeat, do you have a 401k, yes or no? Okay, next question. And this is huge. Is there anyone in your life who would be willing to help you, i.e. give you money so you can purchase a home? And that usually triggers something. Oh yeah, my mother or my father or my aunt or uncle, right? We all know as a licensed mortgage professional that the giftor needs to be blood related. Most of the time, there are extenuating circumstances like a fiance or something like that, where that, sometimes that can work. But so now you've increased where their thoughts of where they can access money, 401k, a gift from a family member. And there's two other ways. There's actually three other ways. Another way is having the seller of a house do a seller concession, i.e. pay for closing costs. And again, because if they say, well, I only have $7,000, a lot of people say, oh, well, then you don't have enough. I don't have down payment assistance program. I can't help you there. You don't have a 401k and you don't have someone who can gift you, but you only have $7,000. So what's that going to get you? I know what it's going to get. It's going to get a $200,000 FHA purchase. And then you got to just find a house where the seller will pay up to $10,000 for the closing costs. And now you're in, and now they're in. Now you got a $200,000 deal and you're making a couple $1,000s, whereas you wouldn't have if you didn't offer these options. So seller concession. And then two more. One is lender credit, right? Give them the option. If you want to make whatever your basis points are, 150, 200, 100, whatever it is, you can say to them, as you know, listen, I can give you a couple $1,000s or more, depending on what your pricing is, and give them the option of bumping the interest rate. So some people don't care about interest rate and payment as much as they do about just moving into a home and being able to afford the payments. That's very important to be clear on. So if you can jack the rate up and give them back 1, 2, or 3% of their closing costs, that becomes an option, right? And then lastly, number 5 is ask the realtor who's taking them shopping to contribute a portion of what they're going to earn toward the closing cost to get the deal to work, right? It might not be a lot because, everyone needs to make a living, but if a realtor is going to make 5 or 10 grand off of a deal and all they have to do is contribute maybe a couple $1,000s to get the deal to work versus not, it's how you sell it to that realtor, right? So as far as coming up with cash to help someone who says, I don't have any money or have very little money, what do I do? Well, here's what you do. 401k, ask a family member if they can help them with cash, i.e. a gift. Raise the interest rate and give a lender credit. Ask a seller for a seller concession, and ask the realtor to help and contribute some of those commissions. And then a hybrid of any of those 5. And a little side note, there's a little technique for you loan officers because a lot of realtors don't realize this. Here's how to get a seller to pay closing costs if they don't want to. Sample, $200,000 purchase price. They want to sell it for $200,000 and they're not willing to do seller concession. Okay, no problem. Why don't we bump the price to $210,000 or $208,000 and then give an $8,000 seller concession? Now, why is that a perfect situation? Because the seller's still selling it for $200,000, and all we're doing is bumping the contract to $208,000 and having the seller contribute $8,000. So you're getting the borrower's getting the $8,000 seller contribution, and the seller's still getting what they want. They're not coming off of what they're expecting to profit. That's another technique. Now, of course, the appraisal has to appraise for $208,000 in that scenario, but it's worth a shot if you're running out of options. So that's how you can help someone who doesn't have money. And the person who's got the low credit score, we talked about that. Help them figure out a way to help them pay down their credit card balances. Same way, 401k, get a gift from family, and zero out the collections. That raises the score. And then how do they get money to purchase a home if they don't have any? Down payment assistance, 401k, seller concession, lender credit, realtor credit, and a gift from a family member or friend. So great question. And listen, we're looks like we're starting to run out of time here. So I hope this has been valuable for you. Reminder, there's no such thing as a bad lead, only a bad conversationalist who is not skilled and is not willing to go deeper. So I ask you, are you that person? And if you are that person, there's no judgment here. Are you willing to shift your perspective in having a committed, sustainable, long-term mortgage practice by serving the customer, the lead that comes in who needs your help? Are you willing to take the time to do that? I can assure you, if you take the time to do that and you do it with peace and love, it's going to come back to you tenfold. So on that note, this is Jay Robbins for this week's call, and I will see you next week.